GM, are we live? We're
GM,
live. GM, that
we made
worked.
it.
Excellent. Welcome back to another episode of Solana Weekly News. This is your weekly deep dive into the top stories shaping the industry and, of course, the Solana ecosystem as well. I'm Jack Dunham. You'll notice right now that Finn isn't with us. Fret not. He is going to be joining us very shortly. And until then, I'm joined by the wonderful Mr. Thomas Bahamas from just across the pond. GM Thomas, how you doing?
GM, I am doing great. Happy Friday.
Happy Friday, everyone. It is Friday. It's August 14th, and it seems like the tape has somewhat turned. We do have a very special episode for you all today. We have some interesting guests joining us, but very quickly, at first, a quick read on what we're seeing out there on the timeline and the headlines in the macro world. So, Sol is back above $75, as you all know by now, despite Bitcoin slipping below 63K after an unfortunate barrage, let's say, of strategy sales. Which saw the biggest Bitcoin treasury become a net seller for the first time in a long, long time. Now, there's a lot of opinions floating around the timeline about Michael Saylor this week. As you'd expect, the man spent billions top blasting Bitcoin for years, only to then sell almost 7,000 BTC for roughly $432 million since May. So the stated aim right now is, of course, to increase their dollar reserves, meaning they almost went broke and needed some cash. On the other hand, we have Alex Svanovic, the founder of Nansen, who came out and said on an interview recently that BTC will likely never dip below $60,000 again. So, you've got very opposing views on what might be happening in the immediate future, but I think long-term people are flipping bullish again. And a silver lining that's a bit more Solana specific here, ETF money is flowing back in. Solana Treasury companies have once again started accumulating. As you would expect, Forward Industries is leading that charge. They recently announced a purchase of 254,000 SOL. I wish I had that much money. Now, the TLDR here really is that risk is back on the table for many of these large institutional players. Call them smart money, if you will, at least for the time being. Thomas.
Yes. So I'm loving this story, right? So I feel like, first of all, we got to say shout out to Kyle Samani. He is absolutely mogging Michael Saylor. Saylor is selling the bottom while Kyle Samani is buying, right? Like I've been saying this for a while. We need these companies to be acquiring in the bottom, and they are. So I'm loving that. And as far as today goes, we get to start with a different type of story. We've been talking about NFTs for a while. I want them back. And today we're going to talk to one of the top NFT projects on Solana, and they have been cooking, right? So they've got a lot going on. They're clay dinosaurs. They're the Claynos, built on Solana. They've been on Solana for a while. They're OGs. They have an Amazon Prime Video show. So I haven't watched it yet. I don't think it's quite out yet, but it's coming out. And they've got some other news coming up. Is that right, Jack?
That is right. Andrew Pelikas and Nick Cabana are going to be joining us today. Now, we're going to get into that show that Thomas mentioned in just a second. Context here is that this was a Solana mint and it ended up on Amazon Prime. That is insane distribution. So we want to talk about that, of course. We want to congratulate them on all their achievements. We also want to find out about their parent company, Hebo, what it actually is. And I think the spiciest part of our conversation today is going to be touching on the debate that everyone in crypto is having and wants to have, hasn't quite concluded. It is, of course, about token versus equity and how value accrual mechanisms work and what really happens when a successful company launches a token, even when the company also has equity. So there's so many different angles to this. One of the recent revivals of this discussion, you'll remember, was with the Venice token. VVV, I think, is the ticker. So very much a heated conversation, very much ongoing, but I'm super, super curious how their success is going to translate into this token in the future as well. Hint, there might be some alpha coming from the Claynos in a second. Finn is, of course, going to join us shortly after this conversation. He will be back in the driver's seat, and he's going to talk us through the biggest stories of the week. Thomas, should we bring on our guests?
Yeah, I say we do it. Let's bring them on.
I say we do it as well. Let's bring on our guests. Gentlemen, Nick is joining us. Hello,
Hey.
Andrew is also joining us. Let me introduce you guys properly, actually, because I know many people are aware of Claynosaurs. I know many people know the Amazon Prime distribution story, but I think people might not be super familiar with your personal backgrounds. So let me give a little bit of an introduction to you both. Claynos obviously started life back in 2021 around then, went on to become one of the breakout IPs of the entire Solana NFT era. Millions of video views a week. Genesis Mint, I think, did about six figures within hours. Now the team is also stacked with people who worked at massive companies. You've got Sony, Disney, DreamWorks, Marvel, the whole shebang in there. And the two gentlemen joining us right now are certainly right at the center of it. Andrew is the CEO, sort of the finance and deal making brain of this operation, if you will. And then we have Nick Cabana, the co founder and chief creative officer. Now, this is something that I really want to mention. Nick has worked on a very long and impressive list of projects, including Jurassic World, Fantastic Beasts, X-Men, Suicide Squad, and Game of Thrones, even. So if you're looking for range, I think this is the man who's got it. Gentlemen, it's great to have you on. Welcome to Solana Weekly News.
Man, it's so good to be here. I want to say that we're very proud of Solana being our birthplace. But I don't think we're just one of the top Solana projects. I think we're one of the top NFT projects on the planet. Uh, and
Yeah.
and and the fact that we come from here is has always been very special to us. And Solana has shown us so much support over the years. But yeah, we're really stoked to be here. Crazy intro. It's weird to hear it from you guys, but very, very excited to be here. And the last couple months have been insane for Claynos.
Very, very happy to have you both here. Now, I want to start right at the beginning, if you don't mind, because I did some digging, and I'm sure you'll correct me here if I'm even a little bit wrong. But it turns out you guys have known each other for around 20 years now. Is that correct?
Probably 22 years,
Something
I would
like that,
say.
yeah.
Probably
Something like
22
that. Yeah.
years.
20, yeah,
Wow. So
20, since
We were,
2003.
yeah,
wow,
something
Yeah.
like that.
that is a long, long time. And given that that is true, and you guys have launched one of the biggest NFT project IP projects in history, you've achieved this incredible distribution milestone with Amazon Prime. Does that then make you Warren Buffett and Charlie Munger of NFTs?
I love the analogy. This is right up my alley. I could only, if I even said a sliver of yes, I don't even think we're 1% of the way there. But in many ways, we are, I think, a good duo. And obviously doing something very different. And unlike Charlie and Warren, like I say that like I know them, like Charlie and Warren, my buddies. But unlike those two guys who are obviously storied and been around for a very long time, Nick and I have like very, very different backgrounds, which I think is sort of a superpower. Where Nick is clearly the creative guy, and I'm clearly the business finance guy, and that puts us in these distinct categories where we're able to add value to one another without actually necessarily stepping on each other's feet.
I like it. I like it.
Absolutely. Well,
Now, you guys are one of the biggest NFT projects in all of crypto. I love to hear that. I love the confidence on it, but it also seems like the NFT isn't really like the only part of what you guys do, right? Do you guys want to explain Hebu a little bit? Like if someone has never heard of it, is it a studio, a platform, launch pad? Like what? Do you guys want to explain what that is a little bit?
Yeah, I can explain to you. I mean, even within the Clayno universe, there's so many other things besides the NFT collection that I'm sure Nick wants to speak to. But at
Yeah.
this larger, zoomed out level, like you're describing, the simplest analogy is Hebu is basically the studio to Claynosaurs, or an analogy that people would like might be like Pixar is to Toy Story, right? Now, the big difference is that Hebu, unlike studios of the past, we think has to take a different form than studios that have existed before us, and that's more of an open, platform style approach that invites fans into the building of the properties early on into their life versus typically what studios do is they build these great stories behind closed doors and then release them in this grand fashion at the box office with a lot of marketing and corresponding toys and other releases, right? Which was cool for a time and it worked at that time, but we think the studios of the future take a different approach. And so the simplest analogy is that we're like a 21st century studio, or not every time I say that I think of 21st century Fox, but we're a modern studio that services the creator economy, doesn't compete with it. I think that's a big difference.
Oh, that's amazing. So it's like the next gen of the modern studio is what you guys are building. I love to hear that. So with that, like
I want to ask about the deal flow. Sorry, just before we gloss over this, because it's probably something worth getting a little bit into. We sort of talk about, just because we've covered it in the past, this Amazon Prime deal. But I think for many Solana founders, it's not just sort of a distant idea, almost out of reach, right? Getting that level of distribution. We talk so often about apps that launch on the Seeker, for example, the Solana mobile app store, getting tens of thousands of users. But when you're talking about Amazon Prime level distribution, you're in the millions immediately, right? So how does that happen? Do you, I don't know, do you call Jeff Bezos? Do you cold email him, or do you bump into him in Monaco or something on a yacht? How do you end up taking a Solana NFT project to Amazon Prime? How does that work?
I wish we had a story like that, by the way. I'll let Nick
Yeah.
tell the story, but I wish I called Jeff Bezos while he was on his yacht in Monaco.
Yeah.
But Nick will have a
Um,
more realistic story.
Nothing is more powerful than good product. And the way we build product, the way we built our original collections was by collectors for collectors, but also by IP builders for people that love and enjoy animation and toys and things like that. It's how we built it, which means that the product stands on its own outside of completely abstracting the tech when it needs to, because it's not the point. The way we always saw our use of Solana, our use of blockchain tech was to provide kind of cooler, forward thinking experiences for the consumer. And so, the Claynos by design makes sense next to Disney products, makes sense next to the stuff that DreamWorks is spitting out. And we used to build those IPs for those guys and we wanted to do it for ourselves. But the point I'm trying to make is that the quality is there. The content makes a lot of sense. And I think our approaches to where we think digital collecting will go also helps. In Amazon's case, they reached out. They were looking at our content on Instagram, TikTok, things like that. We hadn't really seeded the YouTube account at that time, but they reached out because they had heard about us from other people in the industry and other studios that were also looking at us. Once you're in the conversation, like you're part of that conversation across the board. I was doing a couple. I was invited to do a couple like keynotes, just about everywhere at these like large entertainment and kids media conferences, and and it sort of struck a chord. Our story, the way we were tapping into the creator economy in very unique ways, the way we were able to monetize in parallel, and the fact that we were getting so much traction organically, and gaining a lot of fandom across the board was something that resonated. So Amazon reached out. They sort of wanted to take like the vertical content we were making for social shorts. Um, but when they found out that we were actually, making shorter episodes, and we had plans to make a longer form series, they got super interested. Like, "Well, why don't we just put those up when you guys have them ready?" And we're like, "Well, they're gonna be, like, 2 minutes each, and it's, like, 3 of them." And they're like, "No problem." And we wanna start, building a relationship with you guys. We'll give you the stats. It's sort of like a help me help you type, structure. Um, and what's really cool about that is it's a signal of where the industry is going, meaning distribution is everywhere. It's highly over competitive. Exclusivity is sort of going out the window at a rapid rate. And Amazon is totally willing to dive into the creator economy and break the mold, meaning it doesn't have to be a full TV show, meaning it doesn't have to start as a movie. They're willing to take on concept shorts and see if we have the ability to have to transport like our fans over to their platform, even if the content's already on YouTube. And that's happening everywhere in the industry. But yeah, to answer the question, it it's an amazing feeling. It's sort of the dream everybody talks about. It's the kind of distribution we could have hoped for. We are having amazing convos with other streaming platforms for the longer form series. Um, but that was the master plan, is we had never built for the echo chamber that is like crypto Twitter or specifically the NFT demographic. We had built for the landscape that we want to see, which is, hey, digital collectibles are going to be something that normal consumers love and collect. We want to build a brand that can transcend and that can be have toyetic licensing potential, all that kind of stuff. And I think that's all starting to come true, which is a wild feeling.
That's amazing. That's amazing. So I mean, it kind of seems to me like from a lot of other projects that we've been talking to that building for crypto Twitter is just not the way to do it anymore. Um, and it
Yeah.
seems like, yeah,
So I,
have
I
you,
I just want to throw in a caveat because it's not throwing shots at crypto Twitter. I think what I'm saying is like you don't want to build for just like a closed loop bubble.
Yeah.
It's still home turf for us. This is our come up. This is our birthright. It's where we come from. Community has always been very much, especially that early seeded community. It's been a part of everything we do. It's just that our mandate was to the more we proliferate, the more we grow the pie, the more value for those early believers will be funneled back. Let's say even to the NFTs, the OG collectibles, things like that. The brand itself, obviously. Um, so yeah, so it's not that you don't want to build for crypto Twitter; it's that you want to find ways to transcend beyond it.
That's well said. That's very well said. It's like you made it out of the bubble and you guys actually have like amazing distribution when it comes to it, right? Like
Yeah.
incredible followings on other platforms, which, is not easy to do. So well done on that. And one of the things that we have got to get to, we've got to hear about the token. So you got the distribution, NFT for a long time, you got the show on Amazon and now a token. What's going on with the Hebrew token?
So I think okay, so a lot of the noise around Hebrew token. I mean, at the simplest point, it's basically the token for this larger ecosystem that will be Hebrew. I think to dig a little deeper into it, um, the idea is that fans and creators have this symbiotic relationship. Often, like I said earlier, you've got this idea that I'll build this great IP and then I'll see if fans are there. And we just know that doesn't work anymore, right? There's just too much fragmented distribution. It's too competitive. And so our point of view is you need to compete at a creative layer, not a distribution layer. And that means that you need to find your fans early and kind of see like what they do or don't like. And that is what Hebrew is effectively. And then the token inside of that has to reward fans. I think one of the analogies that I mentioned somewhere else and people really liked was this idea like a party, right? So in if every single like content opportunity or entertainment opportunity for the viewer is a party, consider what it looked like to grow up in the 90s or early 2000s. There's only so many available parties or content opportunities to consume at any given time. Like there's many channels but only one thing's on at a time. You go to the movies, only one thing at the box office to watch. If you're going to like a blockbuster, yeah, there's lots of options, but you pick one and there's even that is not even comparable to today. So you
The good
have
old
these
days, right?
good old days, exactly. Little known fact, I used to work at effectively what a Blockbuster back in the day when I was like
Oh,
16,
sick.
17. Yeah. But today that optionality is so abundant that you don't have you don't even the greatest content in the world doesn't really succeed today. So you got to so now you're not competing at that distribution layer of like how do I get into the box office, right? If you're a big studio, or how do I get into wherever these toy stores and so on and so forth of the TV channels. Today it's like any one of us, we're literally like recording something right now for public viewing, like right, we can all post and put content online, which means that you need to compete at the quality of your content versus at this distribution layer. So a lot of these studios aren't built to create the best content possible.
Yeah.
They're built to build really good content. Like I'm not going to tell you Disney doesn't make awesome movies, but it's not the best possible content. Today, to survive, you have to find a way to build the best possible content, right? So how do you build the next Stranger Things? How do you build the next Game of Thrones? How do you find these like opportunities, and before you invest grand investment money into it, in order to go find it. So going back to Hebrew, it's aggregating attention and fandom around these properties as they grow and flywheeling that in such a way that the party, commands its growth and rewards the early comers for their participation early on, right? That early fan is worth a lot more than the 5,000th fan or the 200,000th fan. Or in another way of analyzing it, like the first 100 views we get on a video on YouTube are way more valuable than the marginal difference between the million and the 1,100th view, right? Same 100 views, but very, very different value. You got to reward those early people until there's a tipping point, and then the party becomes worth going to. And that's super valuable. And so disaggregated attention is effectively worthless, but aggregated attention is very, very valuable. And platforms like YouTube, streaming, and social media are actually built to abuse this fact, such that the individual does never command any sort of bargaining power or commands any value for their attention. Hebrew is meant to aggregate it around fans and creators symbiotically and underpins that ecosystem with the Hebrew token to effectively move this aggregated attention into properties.
Yeah, I
So
like that. There's something that was like the find your first 1,000 true fans. I think it was an essay
Right.
by like
yeah,
Kevin Kelly a long time ago. But it sounds like
Yes.
you guys found those fans
Yes.
and they have been pretty die hard. And
oh
now
yeah.
you're looking to reward them and bring them along with you as you guys go forward. That's what it
So
sounds
that's,
like to me.
I mean,
That,
isn't
that's
that
totally
what
right.
many that's sort of like what a lot of NFT projects were attempting in the beginning,
Yeah.
actually, ironically, and so what we did is we've been pulling a lot of learnings from what we've done at Claynos for 4 years. And we've been extracting what we think can be scaled and almost automated for creators on how they can manage community, how they can manage fans, but also what's meaningful for fans, which is social equity, which is
Yeah.
how do I belong and what's my identity alongside this brand? And I can prove that I was there uh, and I mattered. And that stuff is preserved on a timeline. So it pulls from all these things that we know work with Twitter. It pulls from these things that we know work on Kickstarter, but removes all the things that don't work. And it's community driven. It's creators can do drops and fans can be rewarded as they engage with those drops. All that kind of stuff that crypto Twitter has been doing, but it's been all over the place, and it's not really aggregated in a cohesive way that normal creators or like Web2 creators can kind of pull from because we've been getting so many questions, for years from a lot of, let's say, Web2 indie creators that have so much potential. They're like, "How have you guys done what you've done? I don't even know where to start." And so that was where that platform, the idea for the platform came from. But essentially, the elevator pitch is it's really a curated launchpad for creator IP, powered by one universal token, where if attention, goes from transitions from one brand to another, is still powered by the same token. So actually, that's a great thing for fans or like let's say like tastemakers of IP that want to travel from one IP to next or engage across the board. The same way an NFT collector um, might be collecting, all these different types of projects and engaging with all of them, but would be rewarded by the same overarching kind of economic layer for being a tastemaker of those projects. So there's some parallels there. And
That portability is super important for
yeah,
like this notion of like meme tokens, right? Where like meme tokens compete for attention, where people, they get attention, price goes up, and then a lot of people get left holding the bag, right? And that doesn't help the brand, and it doesn't help many users. It's basically a zero sum game where a lot of the same people end up losing, and a lot of the same people end up winning. And
Andrew, on
in
that
our
on that
environment,
point, sorry,
yeah,
sorry
go.
to butt in here. In the interest of sort of neutrality and balance here, I do have to butt in with this debate that's been raging on. We briefly touched on it on the intro. This idea of tokens versus equity.
the spicy
There's a bit of
question.
a parallel there. I know it's ongoing, and a lot of
Yeah,
people get their knickers in a twist about it. We haven't quite resolved it as an industry, it seems. So, really curious what your take on it is, because there's a bit of a parallel here with what you're describing. Many of these meme
right.
tokens get launched and then the community ends up holding a bag, and between them, even within a similar category, they're sort of competing for attention, competing for capital. It doesn't necessarily create a positive environment for people to speculate in, right? As you mentioned, it's a zero
Yeah,
sum game at times. So forgive me for drawing parallels with a business model that's very, very different to yours, but Venice is a prime example. It sort of reignited, really sparked this discussion, I think, across ecosystems. People are saying no value should accrue to the token. Others are saying no, the company has equity. So the market essentially repriced that token, if you will, as a sort of a prepaid access to the company. Then there's an additional optional burn mechanism in there. So some interesting tokenomics at play. But then the other side is obviously that the equity itself is what's capturing most of the company value upside. So if I understand correctly, you guys have built something kind of similar, a bit more explicitly separating equity and token. Correct me if I'm wrong here. There's a 15% equity, company equity reserved for options holders. How do you, in simple terms, how do you separate attention and capital that's meant to go to the token and that's meant to go to the equity? And how do you then reward people that participate in these?
okay. So, oh my God, how much time do we have?
I know. Sorry.
I
I'm sorry
probably
to
have
drop
like
this on you.
100 pages.
It's
I'm
early in
not
the
even
morning. I
exaggerating.
had to do it.
No, I love the question. I think you dissected the issue really, really well. And I'm just trying to aggregate thoughts because I'm not joking. One of one of the things I do is I just like spit out and I write things, and I've got literally, I think, 100+ pages on this exact topic. So first things first, like I think you categorically, it's correct, right? You called it equity and then I guess meme tokens or like non-equity tokens. I think the two categories that people should be thinking about are real world assets, or in this case, the example of that is like, token wrapping equity, and equity is a real asset, so to speak. And then you've got these non-real world assets, right? These sort of like meme tokens, utility tokens, governance tokens, or in other words, tokens that don't point directly to what we traditionally call an asset, right? And so on the equity side, and so what you see a lot of tokens doing today, I think, and this is where you have this conflict of interest that you sort of alluded to, is you've got non-equity tokens masquerading as the value proposition of an equity token. And what they do is they say, okay, well, I'm going to launch this token that's a utility token, but then I'm going to funnel all of the actual revenue and sort of like profit from my venture back through the token. And I don't think that's the wrong approach. I think that's actually, I don't think that doesn't work, to use a double negative and confuse everybody, but I think that kind of works. But you're basically emulating equity. The way equity works, the governance structure of that, having it off chain and legally like titled, or whether you want to have it digital completely, I think there's like a potential gap of maybe issues that are not governed by a regulatory body that introduces some risk. And if you're adept enough to understand that risk and take it, that's fine. But the conflict of interest often happens where you've still got this equity stack and you're trying to drive value into this utility token. And that's sort of like well, who do I serve? My token holders or my equity holders? Yeah. Some people try to solve this by making those two people the same, but you're still like these traded things where if I own 5% here and 2%, you're going to always have a conflict of interest. That's the big no-no, right? So I think if you're going to do one or the other. Now, I don't think when the advent of Web3, decentralization, tokenization became popular, I don't think that the intention was necessarily just to take real world things and wrap them with token, right? Or to emulate it in that manner. And I don't think there's still benefits to that, but the real proper thought is that those tokens kind of create, and the word crypto is cryptocurrency, is more akin to having a token that is a currency versus an asset, right? So if I think about how currencies work, and I think about how they underpin an ecosystem, and when I think about like the average person who's holding US dollars or Canadian dollars, that is a currency of transaction. That is an asset, but it's used for transactionally. So I hold US dollars or Canadian dollars or whatever in order to buy things in this economy, and people inside of the economy build things, and there's a supply of goods and services that occur in this ecosystem. Okay, that's very different than a company that's just selling something, and that's the difference between equity and currency. I mean, I'm really synthesizing. So when I think about what would be a pure token in the pure sense, it's not trying to tell someone that, oh, you have governance rights through this token, which have some value. I don't think that makes sense. Having voting is fine, but that being the value prop doesn't make sense. Having the circular sort of like buyback mechanism is just circumventing what is equity, introduces problems. Ultimately, what you want to do is create a currency that operates inside of an ecosystem where people actually hold it because they want to do things in that ecosystem. I think you start to see that with some L1s like Ethereum, Solana. People hold those things. I hold Solana in my wallet because I'm like, you know what? There's a lot of things to do on Solana, whether that's buying meme tokens or buying NFTs or participating in this or that. And then even when we sell like goods on our shop, we let people pay in Solana. Okay, cool. That's like a currency of exchange. The value prop of there when people use a market cap is not appropriate. And if you were going to use that value prop, and I think I wrote an article on this a long time ago, didn't get many reviews, but it would diminish the price very much. So when I think about what we've done, and just to circle all the way back to what we're talking about with Hibu and Clayno, we've got Claynosaurs in its own operating company. And what we've said is, okay, we want all of our fans to be aligned, right? I don't want this misalignment of like a Clay meme token or a non-equity Clay token. And because a lot of the value of that brand comes off chain, it's not all there. We've got, we talk to Amazon Prime, we have toy deals. I'm not going to get all these people to start funneling revenue online, on chain rather. I need to align our holders or our fans with equity. And so that's what we did. We said, okay, these guys, much to this same thesis that we described for Hibu, add a tremendous amount of value to Claynosaurs by being to the party early, by bringing views into YouTube and social media so that we have billions of views and millions of followers there that extend beyond Web3, that gets us on Prime, right? All of that comes from those folks, that beginning of those folks, the early people to the party. Let's give them the equity in the company. And ultimately, it's about aligning interests, right? So a lot of people will force a token into the idea of their business or their ultimate platform or whatever the case is, in order, just because they think they need a token or to extract or stuff like this. We're using it the way it should be, is alignment, right? So we're issuing the equity to those holders. The underlying principle is we want alignment, and reciprocal, like reciprocity in the value prop. That's the equity part. And that's inside of that operating company that is Claynosaurs, right? Then Hibu is a different company. We have a Hibu Foundation that's set up offshore. That's, a foundation structure that is similar to any other foundation for these bigger L1 tokens. And that is set up with the intention of building out this Hibu ecosystem and having that token represent the underlying currency of that economy. And Hibu Foundation effectively acts as like the central bank of the ecosystem, right? And like a central bank should operate with some degree of, with a nonprofit, there's no profitability that's meant to run through a foundation, but with the intention of having that to churn the ecosystem, to make the economy work, right? And our point of view is that unlike a central bank that sits there for hundreds of years or decades to continue doing this, you do allow it to decentralize and govern itself over time. So you don't need the foundation forever. Eventually, the Hibu ecosystem operates in its own self-fulfilling value, market value way, right? And so what does that mean for the value of the Hibu token? You start looking at supply and demand for the underlying currency, right? So if anyone's like a foreign exchange trader versus an equity trader, and if you've done both, you'll know the difference between analyzing a company and analyzing a currency. You're looking at that supply and demand of that currency and what drives supply and demand. And in our case, demand comes from fans who want to participate inside of these properties and who want to be recognized as, fans and attention givers to these properties. That adds value to the ecosystem. And then the buyers, the demand for the token, are the creators who are like, you know what, like, I don't want to spend $500 million investing in the next Gladiator 2 that's going to bomb at the box office or whatever, some piece of crap movie. I want to go and spend a little bit of money, maybe $5 or $10, to go into this ecosystem and see if people will react to my value prospect or to my IP, to my new entertainment property, whatever it is. And that is a big amount of demand when you consider the amount that studios spend per year on content, throwing darts at a board with the blindfold on, running in circles in a dark room, right? So you're taking like, $100 billion of annual content spend that you take a fraction of that into directing where that money should be spent. And Hibu has a bunch of demand from that. And then I think there's just, and then on the fan side, you just have a lot of people who want to participate in these brands. I mean, like, you have $3 billion of capital formation on Kickstarter and Patreon that gets zero recognition back from those projects. It does the hardest part of any relationship, which is getting someone to spend money. And in those cases, for the reciprocity is very, very low versus buying a real product. And then you let them go, right? So I just, to us, it's just so bloody obvious that like this whole system is locked into this centralized studio gate kept world, and it's not working. And for anyone who's inclined to ask questions on this, like, please by all means open up the stock price of any publicly traded studio, disruptor, Netflix, and tell me that you'd rather invest anywhere else in the market probably, and and tell me they're succeeding, right? They're not. And the problem is they're competing at this distribution level that is wide open. Like, they're like, oh, I'll capture more distribution, but it's open. Like, there's no point of capturing something that's growing infinitely.
Yeah.
And they're not.
Oh man, that's okay. So there's so much there, And that was amazing. That was like a better answer than we could have hoped for to that, and a full breakdown. I think
In fact,
we
if
had
I may, I think Andrew might have broken the record for the most number of questions that we had answered in a single response.
Yeah.
I think you're now number one on that list.
I hope people followed everything.
No.
But I told you it'd be long.
I should
Yeah,
probably,
that's worth
because I saw some
re-listening
of these
to.
questions pop up, guys. So I should probably just mention the TGE of this token, which happens soon, happens before the platform gets launched. The platform in fall will be launched at a beta phase, and will be launched alongside a few creators. Obviously, Claynos will be on the platform as well. Those creators are highly curated. That protects obviously the fans that want to participate as much as ourselves. And eventually that platform becomes very democratic, which means any creators can come on it. The rails are in place for them to bootstrap their IPs alongside a fandom base.
That's great. So, okay. So that was my next question, was going to be when launch. You already answered that one. Sounds like it's coming soon in fall. My next question that you guys haven't gotten to. So when you look at launching a token in 2026, how do you do this, right? People are launching 1 million tokens a day on pump.fun. Obviously, you're not going to do that. Like, what is the strategy that you guys are going for to launch this token?
So we're doing a fair launch, or we're using a launch pool. We're using the Metaplex launch pool sort of protocol if you were a contract, and it's a fair launch. And what that means is we're putting in a 5% supply of the token into this launch pool, and we're just saying like there is no price. Like the market should determine the price, and depending on how many contributions are made to that launch pool, the price of the token is determined thereafter. So it's a 2-day event. It's August 25th. It opens August 26th. It stays open, or the first 36 hours. I think it's open, and then after that, there's a 12-hour period, and then it launches. And in the early part of that period, there's some bonuses for being there early, and then that kind of tapers down over time. But effectively, it's market determined pricing, and I think that's important, right? Because like going back to what I just sort of droned on about for a while, it's very difficult to just sort of like day one peg a currency unless you literally peg it, like to an actual fiat currency. So how do you determine that value? There's no valuation exercise for that on day one outside of saying to the market, like, this is what we're doing. This is the objective. This is the market. Like, you tell us what it's worth. And I think that's a much more sustainable way of launching. I think it's just a way fairer way to launch. It means there's no sort of like sniping or keeping things there, and there's none of that activity. It's sort of like it is what it is.
Yeah.
And then afterwards, it kind of it's a signal for us to understand like what people think of this. And it gives us a sustainable foundation to grow from. And we're here to build this thing for, could be the rest of our lives if we do this correctly, right? Like I think we're here to build this for a very, very long time. I droned on for a while. I think the use cases for what we're building actually extends way beyond just the entertainment industry. And I think that if you're going to think about building something for a very, very long time, you want to like start off on the right foot, which is not, taking a guess at the value, upsetting the market with some interpretation that may or may not be correct. Trying to value something that's not necessarily easy to value. It's like the market is the value, and I think it's better to leave it that way. So I'm fond of that approach. For those who've ever launched a token and understand this, like doing that leaves a lot of financial opportunity on the table. And I think that's the right choice though, if you're ready to build for the long term. And I think this is what we're excited for, is just to get it out there and just start having people move around it, having people talk more about it. Ultimately in Web3, like once you have a token, people start listening more. And there's a lot more questions and a lot more people like thinking about you guys, thinking about us. So I think that's an important part of it too.
I love it. I love it. Marked on the calendar, August 25th. I got to say, I love what you guys are building. I like the way you're thinking about this. I've been a fan of Claynos for years, and this has got to be one of the most exciting projects on Solana. So keep it up.
It certainly is. Question from the community: does Jeff Bezos own any NFTs?
Last time I spoke to Jeff, he didn't tell me the whole portfolio, but
no clue. No
clue. I wish. I hope so.
I'm sure once he sees them pop up on his yacht TV, he'll be buying a
We'll
few.
try
And
and
he's
stick it in
sweeping
the
the
next
floor.
contract. Like Jeff Bezos must buy a Clayno.
Yeah, definitely slip that one in there. Gentlemen, it has been an absolute pleasure talking to you. Really appreciate it. Thank you so much for taking time to explain that sort of the way you view, let's say, the discussion between tokenomics and equity and the upcoming TG. And I'm sure it's going to make people's lives a lot easier as far as aligning incentives as well. Congratulations on the massive distribution success with Amazon Prime and all the best with the TGE. I think it's through Metaplex, if I'm correct, is it?
That's right. Yeah, we're partnering with Metaplex. Great team that we've known for a very long time, and we're excited to launch with them.
Finally, where should people go to follow along with all the developments, make sure they are on point with the timeline, so on and so forth? What's the best resource for everyone to go to?
Yeah, the two major accounts would be the Claynosaur's official account on Twitter, and then there would be the Hebrew official account as well. So both of those are great distribution channels to get officiated information. Obviously, you guys can also follow like Andrew, myself. We post stuff all the time, but all the official comms are from those two main page accounts.
Excellent. Nick,
Amazing.
Andrew, it's been a pleasure. Thank you so much. And we will catch up soon, I'm sure.
Gentlemen,
Thank you,
thank you very
guys.
much.
Thanks for having us.
Man,
TB, interesting times we live in. Token, equity discussions, NFTs are on Amazon Prime. They're launching tokens. I mean, the amount of on-chain innovation is crazy. And I know Finn gets very excited about discussing these new primitives and then new primitives that emerge on top of each other, sort of commingling and creating entirely new verticals. So with that, it's probably a good time to bring Finn in. What do you think?
yeah, I think so.
Should we get him on? Let's see.
Yeah.
Is he waiting for us? Where is he? Finn Miller, the man, the myth, the legend.
Bring him on,
The
they say.
newsletters
Bring
are.
him on. Don't know what we chat with the Claynos. You know we love the Claynos here.
We love the Claynos. How you doing, Finn? Happy Friday.
Happy Friday indeed. What a stimulating conversation. I think everyone can attest that Claynos have been there. They've been through everything. They have come through the darkest moment of NFT history, and now they're on Amazon Prime. So a fantastic rags to riches fairy tale story for them, and I'm sure it continues to go from here.
Absolutely. Massive thanks again to Andrew and Nick for joining us. Now, Finn, I was reading through your newsletter earlier today. We are going to dive into the top 6 stories shaping both Solana and the industry, but then there's a few sort of spicy remarks that you've left in the introduction that I want you to not justify or defend, but talk us through, because I feel like it's particularly spicy this week, and rightly so. So I'm curious what you're seeing out there in the timeline. What's your take? What's your vibe check from the last 7 days?
The vibe check, Jack, is that the trenches are alive with the sound of mimetic warfare. It's absolute chaos out there. The pump v Fomo conflict is ravaging everybody in the trenches. Great for Solana, great for on-chain activity, great for a lot of coins that are going up to some multiples we haven't seen for a very long time. But traders, they're not too thrilled about a lot of the fees they've been throwing around. Now, obviously, Fomo and Pump, tremendous applications. They're doing an incredible job, bringing people into this ecosystem. But there's been a lot of talk on the timeline about who you should align with, who charges more fees, and who's better for the ecosystem in general. So, a lot of shade being thrown by various traders, various influencers, and I hope that everybody can kind of rise above it eventually. What else? The SEC is taking matters into its own hands. I think this is fascinating. Clarity has been down in the dumps for a long time. People have been saying it's never going to happen. The SEC has pulled itself up by the bootstraps, and it said, if we can't get this through the Senate, we're just going to do something ourselves. Now, obviously, there's nuance to this. It's not quite as simple as that. But if the SEC can get something through at an administrative level, that kind of, I guess, opens the door to clarity, and it puts a lot of pressure on senators to actually get something done. So very exciting. What else? The DATs are back in town, fellas. They've been digging through the couch cushions. They've turned the jeans upside down. They found a few extra coins, and they're clipping funds back into Sol. So exciting times.
Well, you say that, Finn. A few extra coins, mate. They've bought. I mean, Forward Industries alone has bought 254,000 Sol. That's a fair chunk of capital, isn't it?
It is. Forward Industries coming back. They've got a huge amount of motion. Our good friends at Soulmate, on the other hand, just 1,000 Sol. So a smaller contribution, but a contribution all the same. The theme here, though, Jack and Thomas, is that, look, the DATs are back. The DATs are redeploying capital. Maybe they're saying this is the bottom. Maybe they've just actually freed up enough capital to rejoin the Sol acquisition race. But, wherever you stand on the DAT debate, it's it's curious that they're coming back now, and I'm wondering what you guys think that means actually for Solana as a whole. Does that mean that this is the bottom? Does that mean that the marginal buyer is now interested again? Where are you sitting on that? What's your
My
reaction?
inner bull says it has to be the bottom. It says that they are positioning for Q4 rallies, maybe early 2027 Q1 rallies. Not that they have publicly accepted any sort of desire to sell the assets that they're accumulating, but what we do know is if you extrapolate this strategy over a long enough time, hint, I use the word strategy, you end up needing to increase your US dollar reserves at some point as a result of the financial alchemy. So if they're buying, in large chunks at the moment, then I would expect they see some sort of bottom. And I also think the reason why maybe we haven't had this story in the headlines over the last 3-4 months is because smart money, institutional money, whatever you want to call it, has been waiting for that August 7 decision, which never came. Then they found out that it was going to be in September, and now it's probably not going to happen in September. So this clarity debate and this regulatory clarity that's been sort of hanging over our heads for such a long time, keeping people sidelined. Now, I think we're just coming to terms with the fact that it might not even happen in 2026. And as a result of that, people are thinking, screw it, this might be the bottom, it might not be the bottom, but I'm probably going to dollar cost average into Q4, into early 2027 and hope for the best. That's my take. What do you think, Thomas?
Yeah, I mean, I just think Solana's looking good here, right? Yeah, I mean, look at all the activity. We're hitting record numbers. I think they're also probably just like front loading the news, right? Buying before the tokenomics improve with both of these SIMDs coming out. So I think if we didn't hit the bottom, we got to be pretty close, right? So I think it's a pretty fair time to actually deploy capital for them. And I mean, we've been waiting for this for a while, right? It's incredible to see that Forward Industries is buying as Sailor is selling, right? Like this is great for Sol. I'm hoping that we've already bottomed, but I think it's a good time for them to deploy, right?
I think so too. Speaking of deploying, you'll see on screen here that I've scrolled down to Finn's first story of the week. It is, of course, about the raging meme coin race between Fomo and Pump. So let's talk a little bit about the trenches, which appear to be at war, not like the chain-to-chain tribalism that we're seeing, but it's more of a launchpad and trading venue tribalism that's emerging at the moment within the Solana ecosystem. So quick context here, Fomo has now put up 6 straight weeks of all-time highs in volume. Pump has allegedly responded by copying some of the social features. There are also allegations that Pump is paying some of the top traders to move over from Fomo to Pump. So none of this is confirmed. These are all allegations. All we can do is report on it. But the headline, as you can see, is Solana meme coin race flares as Fomo and Pump compete for trader flow. So one thing that I want to touch on once we dive into the story here as well is a Mike Dudas angle. Friend of the show, friend of SolanaFloor. We love chatting with Mike Dudas and catching up with him. But he's made some pretty wild on-chain moves recently. There is an insane P&L that we just have to get to. So Finn, give us the numbers. Tell us the Dudas story.
So Dudas, greatest to ever do it. Sits on the cap table at some of Solana's biggest projects, steps into the trenches, and on the first day, clips some funds into a coin called Toad. Now he's sitting on an unrealized P&L of about 2 million. Now, obviously, some things have happened. He's distributed that to a bunch of fellow holders. The coin has kind of moved up and down a bit. But you got to admire the motion of the man. He walks in, he clips in some money, and all of a sudden he's up 7 fligs. So, obviously he can't sell that because of liquidity, etc. But it's a great story in itself. Otherwise, the trenches are torn, Jack. They are, you're either team Pump or you're team Fomo at the moment. Fomo has been enjoying breakout velocity. All the metrics are going completely parabolic, whether that's volume, whether that's new users, whether that's even P&Ls by traders on Fomo. Everyone's having a tremendous time over there. Pump responded. They also, unveiled some new social features. I don't think this is a direct copy of them. I think this is something they've probably been working on for several weeks now that has finally, come to fruition at this specific time. But what people are most upset about, I think, is these allegations that Pump is poaching top traders from Fomo, offering them $30K a month to go over and trade on Pump instead of Fomo. And I struggle to find this, a dastardly move, to be honest. I think if you look at something like professional sports, Nike and Adidas sponsored athletes all the time. I don't see this as any different. If we go into this idea that, traders today are the athletes of tomorrow, they're the superheroes of, the next 5 years, it's perfectly reasonable, I think, for trading platforms to try and get these people on their books as soon as possible and, align up some sponsorships, etc. Even here, Aaron Givner, Solana's favorite lawyer, says From a legal perspective, this is perfectly fine. So, sorry if you're upset about the fact that Pump is hiring people to trade on the app. That's, I think, pretty standard business practice. What else we got? Fees. The other one that has caused a lot of drama for a lot of people is fees. In a second article that kind of followed up to this one here, there was a lot of debate between Fabiano.sol, a very popular, very quite reliable and refutable influence in Solana, going toe-to-toe with Seong Park, who's the founder of Fomo. They had a bit of a back and forth over how much fees people pay on Fomo. And look, it's a proven formula that trading platforms that provide a product that people want to use will charge fees. They will accept fees. I think, yeah, if you're paying fees, you're aware that you're paying them. I don't think necessarily that you can be upset about being fleeced by this. But look, obviously, there's a lot of tension on chain at the moment. Thomas, I want to pass it over to you. Where are you viewing all of this? Are you thinking that it's justified? A lot of these comments about fees. Do you think that Pump is off base? Attracting people to their app allegedly. Again, we can't confirm if that's official or not. But yeah, where do you sit on this debate?
I think all of this is good for the trenches. I think the debate's good. I think that FOMO, it just has absolutely crushed it. I think that exchange between Seong and Fabs was hilarious. I think Fabiano might have won a little bit, but you know what? I think at the end of the day, like, FOMO is bringing on so many people, right? Their app is so easy to use. They just removed all friction. They onboarded TikTok. It's like the most addicting app ever. And I mean, the daily active users are proving it, right? Like, it is just up, right? They're bringing so many people to crypto that I think it's fantastic, right? And it's super multi-chain, so it's easy to ape any coin, basically. And yeah, I mean, the fees are higher on it, but people seem to hold more. It's kind of bliss on there. Like, it's different than the trenches. It's not the Pump app. You don't have to, or people aren't like looking into every single holder. Are they worried about bots or not? It's kind of like they see somebody buy one of the coins and then they buy them, right? So it's like the perfect copy trading app. So it's like a monkey see, monkey do. And you know what? Like, it's kind of nice, right? Like, I like looking at it. I think it's overall great for the trenches. Like, people enjoy it on there. Like, the little extra fees, I don't think it's the worst. And I
All
mean,
right,
now
TB,
they're
I've got a bombshell question for you, because you're saying it's good for the trenches. Obviously, pump.fun was instrumental in bringing the trenches to where it is today, and they've been instrumental in promoting it both within and outside crypto native circles, shall we say. But there is this demand from the trenches towards pump.fun, obviously, of this airdrop that was promised a long time ago. For better or worse, it hasn't come. If pump.fun doesn't deliver on that airdrop promise, does FOMO now have an opportunity to become more net positive for the trenches than pump.fun is?
probably not. Pump's a behemoth. I mean, I don't know. The airdrop question is
Tough one.
weird, right? Like, I don't know if they're going to do the airdrop. I don't know if they need to at this point. If they do an airdrop, though, the trenches would just ignite. The trenches would go insane. I still, I still think that even if they did the airdrop, I still think FOMO would do fine, right? Like, I don't think it's going to wipe them out. I think that they brought a lot of the same features that FOMO had to the Pump app. And I mean, Pump is a ruthless competitor when it comes down to it, and they have a lot of money, right? Like, they have $2 billion in the bank. They can pay people for tweets and retweets. They can, pay them allegedly, 20K signing bonuses and 30K a month or something along those lines. So, I still think that, this competition, like, the winner through this is going to be the people that are in the trenches. Pump can't just be running solo, right? They can't be the only player in the game. I think that they need a competitor, and whether it's fees that they're competing on or tokens that don't go to zero immediately after, if they don't take care of like snipers and bots in action. I mean, they're I don't know. I think that a little bit of competition helps everybody out, and I think all this noise is like really compounding the trenches, right? Like, I think it's good for it. Look at the Pump token, right? Like, Finn was talking about how he wanted to short it the other day, but it just keeps going up, right? And they keep buying more and more of that token. So
I did short it. I did. I thought, there's got to be a bit of a correction. There's got to be a bit of pullback here. It did not happen. I am not in that position anymore. You'll be happy to hear. Not financial advice at all. These are trades that I have done and risk that I'm taking with my own capital, and it didn't work out. So don't be like me. But you're right. The week has been very good for pump holders. If you are a long-term trader and you've been holding pump since the lows, I think they were formed about 3 months ago, 2.5, 3 months ago. It's been doing very, very good. We have spoken a lot and in depth about the token, about the value accrual, about the buy and burn back mechanisms. So it's looking pretty good for long-term bulls. In fact, it's probably worth mentioning at this point that Yash, founder of Send AI, and Susie as well, Susie.trade, I think it is, was also on Trading Floor recently, this week on Wednesday, and he was talking about the long-term price targets that he has for Pump. Am I correctly remembering that he said $4 billion midterm, potentially up to $10 billion in the long run?
Yes,
That is correct.
Those are pretty wild price targets. Are you aligned with that? Do you think they're a little bit lofty? Where do you stand?
I think it definitely goes to 4. I think it definitely goes to 10. I can't tell you about the time horizons per se, but I do have a pretty scandalous opinion about the supposed airdrop that people have mentioned. I think the time to do it was 2-3 months ago, and I think now they should actually just burn it. I think they forego the airdrop. I think they burn that entire allocation. All of a sudden, the pump supply evaporates overnight. All of that kind of airdrop hangover cloud is in the past. People move on. And I think the token absolutely rips following that. I think the chance to do it was probably 2-3 months ago when sentiment was at its absolute worst. That could have revived a bit of optimism, a bit of flavor for pump. They've already regained that by the token going up. If they burn the tokens now, they add fuel to that fire and it just rips even further. But yeah, that moment to distribute was 2 or 3 months ago when pump was incredibly cheap. I think now it's a bit more expensive. That becomes a bit more difficult. But yeah, the window is closed in my view.
That is an interesting take. And one of the sort of adjacent takes that I read recently was that a lot of people were waiting for Pump to do this airdrop and reignite the trenches, if you will. The trenches seem to be reignited by externalities like Ansem. So now they're thinking, okay, well, why, when the price is already up, why, when the volume and sort of trading activity is up, would I then go and do something that people are going to dump when maybe, just burning your own token is the way to go? That's an interesting angle. Is it going to happen? Is it going to happen, though? That's the question, isn't it? Would they actually do something like that with a community-first strategy? Is that something that Pump has done in the past? Do we have any reason to believe that they might do that?
No, I don't think we have a reason to believe, but I mean, that would probably be, I mean, what options do they have, right? Do the airdrop now, but they're not necessarily going to get that much out of the airdrop, right? I think that burning would be a very, very interesting option. I mean, it'd be very bullish for the token too, right?
It would piss off a lot of people. It would piss off a huge amount of people, but also I think it would remove a supply overhang that maybe is keeping some people on the sidelines for now. Maybe there's a lot of people who are waiting for this airdrop to happen before entering. Burning it would just rip off that band-aid, and it would be extremely juicy for the pumponomics behind the pump token.
You know what?
It would be bullish.
This is making me think. So on Trading Floor, we also had Sam on, and his pitch was hype, right? And he actually said he brought up this very thing, right? They have a potential airdrop for hype coming up, and he was like, what if you thought about it differently, and what if they actually burned those tokens? And he was incredibly bullish on hype because that is a big opportunity. I mean, if Pump does the same thing, I mean, that brings a lot of buyers in, I think, right? Yeah, I don't know.
Theoretically, hypothetically, sorry for that horrible pun there. In the interest of time, we are going to move swiftly on to story number 2, which, as you can see, headline: Solana ETFs on track to record strongest weekly inflows since May. This is great news for a lot of reasons. It's great news in particular this week. I think that it coincides with DATS, digital asset treasuries, sort of buying SOL near the bottoms. If ETF issuers are having a great time, think Bitwise, think Morgan Stanley's new MSOL ETF. These are the ones that are sort of leading the way, if you will. And at the same time, digital asset treasuries are buying, then we have either bottomed or they're going to keep buying and eventually we will bottom. So I think it signals an early revival of institutional momentum, if you will, going into Q3 and Q4. I think this is exactly what Solana needs, this external validation from, call it smart money, but this is something that I think is very, very bullish, given that these people typically buy and hold. They don't really trade for the short run. But again, strongest weekly inflows since May. The suits are back. Bitwise's BSOL, Morgan Stanley's MSOL. These two assets are These two tickers, pardon me, are leading the flows. And again, it's coinciding with a lot of institutional momentum at the same time as Clarity stalling. So you've got terrible things happening on the one end, including Saylor selling, right? He sold over $100 million recently. So I think close to 7,000 BTC in total he sold since May. But on the other hand, you've got institutional momentum. So make of that what you will. Finn, what are the key numbers here and why should people care?
People should care because it's a great indicator of what's happening on Wall Street, Jack. Institutional players, they are coming back into crypto after a bit of time, away from these fantastic markets that we live and breathe every single day. Solana ETF flows on track for their best week since May, I believe. It's all going through Bitwise and Morgan Stanley's new fund. It's very encouraging, right? These flows have been pretty stagnant for a long time, basically since the first few weeks of launch when everything was happening. They have pretty much slowed down to a halt, and there are some glimmerings of reawakened demand amongst the institutional players. So that's very encouraging. It also coincides with all this renewal and on-chain activity we've been talking about. Obviously, non-vote transactions are back to all-time highs. The amount of wallets pouring on-chain is once again flowing back. The stars are aligning for Solana to begin its very next run. And even in Bitcoin land, Bitcoin ETFs are starting to see a bit more flow as well. So look, it's all looking very, very encouraging. App revenue on the rise as well. Pump, again, we mentioned, obviously leading that charge there. But look, the ETF investors are coming back. The DATs are coming back. All the people who move the most amount of capital in financial markets are returning their attention to Sol. And at the moment, given that we're down after 9 straight months, it feels almost a bit like there's only one way to go, and that's going to be back up. Thomas, have you been keeping an eye on these ETF flows? Are you reading this differently to me? Do you think that, is it fair to call that smart money, given that most of them actually top lasted last year around October?
Yeah, I mean, maybe they're correcting their mistakes, from buying the top to also buying the bottom as well. And I mean, for once, the flows are following the fundamentals, right? So it's exciting, right? There's real usage behind it. Yeah, I mean, Pump is leading like crazy, but I mean, I think that what we're seeing too is like we might be seeing some diversification, in people's portfolios, right? They might be looking at these AI stocks thinking this can't go on forever. I'll diversify a bit, buy a little bit of crypto in their portfolio. So I like the direction of this, and this, I think it's kind of signaling a pretty big shift. So yeah, I'm excited. What are you thinking, Jack?
Well, I mean, is it fair to call them smart money? Going back to Finn's question there, probably, because I mean, if I was to compare their long-term P&L to mine, they're probably doing a lot more, both on-chain and off, to contribute to that bottom line. Whereas, we sort of eat crayons and trade. We ape into things. We short pump, and it just continues going up. And we do all these silly things as retail traders. But is it giving me a lot of hope and optimism that they're now buying what is potentially the bottom? Yes. So that's the indicator that I'm going to focus on, and I'm going to hope and I'm going to cross my fingers that it is a leading indicator, and that Forward Industries has sort of kicked off some sort of DAT purchase bonanza. We mentioned Soulmate. I think they bought, you said 1,000 Sol. Is that correct, Finn?
Yes, I believe
Hopefully
so.
that number, goes through the roof. Hopefully all the other digital asset treasuries also start buying Sol. And hopefully this is the beginning of something very, very nice into Q4 and early Q1 2027, as people have speculated for a long, long time. But it could happen sooner. It should happen sooner. I think the trenches needed to happen sooner, because people have been so burnt from this rotation out of crypto into, call it commodities, call it AI. The money and the attention has gone elsewhere. For 9 straight months, you mentioned, Finn, 75% off the all-time highs. It's been a painful 9 months since the October 10 meltdown. And I think the total crypto market cap all-time high was on October 6th. So hopefully before October 6th, 2026, we get some sort of revival up to the upside. But I'm not holding my breath. You know why I'm not holding my breath? Because the SEC has once again done what the SEC does, and they've put out mixed messages. They've confused people, and then Congress has sort of gone back on what they were doing, and we are stuck once again in a bit of a quagmire. But the headline number 3 that I want to discuss here is the SEC to roll out major initiatives to quote unquote turbocharge crypto industry as Clarity flounders. What does that mean? I'm not sure. I'm not sure the SEC really knows either. But clarity is stalled, as you know, pushed back until September. Is it going to happen in September? We don't know. It's the least clear thing coming out of Congress, coming out of the White House since they announced Project Crypto, which didn't really go anywhere. But Finn, what's the crux of this discussion here? There's a hot take from Nick Garachi that I want to get your take on as well.
Yep. So the best way to look at this is chronologically. On Wednesday, a Bloomberg reporter, I believe Scott Patterson, announced that the SEC was calling an open meeting on Friday where they were going to discuss two major initiatives that were going to, his words, turbocharge the crypto industry. Now, one of those was the innovation exemption, which would, facilitate 24/7 trading of tokenized securities on chain. That's been booted into the netherland of time, but we don't know when that's going to happen. The other was going to be dealing with major initiatives. Again, it was all a lot of hand wavy. There wasn't a whole lot of clarity on what that was going to be, but it was posited as the SEC trying to take the Flounder and Clarity Act into their own hands and write up some legislation that would be a bit more impactful and a bit more immediate. Now, obviously, the issue here is that it wouldn't be written into Congress. It wouldn't be cleared by the Senate. So it would be something that would be able to be overturned following a change in administration. Now, obviously, that would still give us 2 years before that would actually eventuate. But by Friday morning came and went, and that meeting was actually scuppered. That was rescheduled for a scheduling issue. We still don't know what. And I believe that no date has been given for when this meeting is actually going to happen. Again, a lot of people were saying that, okay, this is just another false start. Nate Garachi, on the other hand, is saying that what's more likely is that they're actually some senators have realized what's going on and realized what they can gain by having the Clarity Act go through. And so that hopefully this vote in September is now going to be a lot more positive. I don't know if I agree with Nate here. I think that maybe it was something as simple as a scheduling issue, but ultimately the message here is that the SEC is tired of squabbling with the Senate. They're tired of squabbling with the Democrats over how they can get clarity across the line, and they ultimately want to have something in paper immediately that can give businesses the clarity they need to move forward, and then they can try and push clarity through in the years to come. But ultimately, they're wanting to iterate. They wanting to get something in the books now, and it shows a lot of hunger for some good legislation. Thomas, you're on the ground in the US. Have you heard anything that I haven't heard? Do you think that maybe clarity is getting just kicked into oblivion and we're never going to see it?
I don't think so. It seems like there is like serious demand for people to get this across the line, right? There is, they are kicking it down the line a little bit, but even though it's kicked down the line, people are still trying to get something passed, right? It is good for consumers. It would be better if it did pass, and if not, to get something across the line would still be positive. I don't know. It's like we cover this every week, and I just want something to happen. It seems like as soon as they come back from recess, hopefully they get something passed this year. But Congress just isn't that effective when it comes down to it, right? So they kind of go back and forth on this. It seems like a pretty hot topic. You could just kind of point at Trump, and then it stalls everything. Is kind of how it looks like it's going right now.
Yeah,
So
and on that point, to your point there, Thomas, I want to read this quote that's in the article as well from Rebecca Rettig, Cheeto Labs Chief Legal Officer, who we spoke to a couple of weeks ago. And she put it perfectly, I think. She said, this bill is a win for the Democrats. I don't know why they don't see it that way. And crypto, in terms of crypto, the genie is now out of the bottle. We're not putting it back in. And she also said that I actually think with the institutions coming in, the clarity will put everybody on an even playing field. So frustrating to see that again it was stalled, and exactly to your point, Thomas, not a very effective decision-making body. They're great at deliberating, but I think when it comes to getting things over the line, not particularly effective. And I want to share one other slightly hot, slightly tongue-in-cheek take, which again fuels my frustration about this. It says, my understanding of the Clarity Act failing is that they put together this broad encompassing bill for 2 years, and then the last part was that the president and elected officials had to stop scamming people, and they were like, no, we can't agree to that. That's an outrageous demand. So I think that's sort of the plebs shouting in from the sidelines, but that is exactly how I feel.
It's one of the
what a
best
ridiculous
tweets of the year, that one, to be honest. I love that.
I think it's a banger, yeah.
What a ridiculous timeline we live in, right?
Well, look,
Yeah.
Trump's crypto income in 2025 was over 1.14 billion. So, I think it's fair that the Democrats want to see some lines in the sand. That means he can't do that. Hopefully clarity gets us there. I guess it remains to be seen if the lines are going to be clear enough for people to operate within.
Not holding my breath, put it that way. Another trade that didn't work out, I was talking about shorting pump there, hoping maybe that it was a local top. I also tried to go long the very bottom of clarity odds passing before the August 7 recess. I think I bought some yes at 22% chance of it happening, and then it dipped all the way to 16 by the 6th of August, and then I had to close that position. So
next
again,
guest on trading floor, Jack Dunham.
Inverse Jack Dunham.
Inverse Jack. I think honestly, Inverse Jack could potentially be more profitable than you two combined. Just saying. That's not a jab at you, more of an insult to myself. Now, story number 4, which we have to get to in the interest of time, but we're not going to talk too much about because there's been enough chatter about this on the timeline already. People have come out with very strong opinions, as they should, because it was a near catastrophe according to them. But there's also very strong opinions pointing the exact other way, that it was a bit of a nothing burger. So the headline, as you can see, is Solana hit 86% of its Halt threshold after a Teraswitch routing failure. Now, this makes it sound like we were on the brink of sort of a network-wide meltdown. And this chart from Marinade certainly makes it look that way as well. But then the arguments on the other side of the aisle are basically saying, look, the reason why it didn't cross over that threshold and halt the network is because so much technological work, so much innovation, so much physics has gone into preventing this, that as you can see, it didn't actually happen. As bad as it is, as bad as it looks, it wasn't a catastrophe. So yeah, two very different sides of the story. Finn, do you want to take us through what the details of this potential halt were, how it happened? Is it likely to happen again? Should people be worried? Should they sell everything and put it in a bank account? What's your take?
Not financial advice. I think the reaction to this was a bit overstated. We won't go too deep into the technicals, but basically there was a routing fault with Teraswitch, a Solana infrastructure provider, and that meant that a huge amount of validators were unable to finalize their transactions. We did come very close to a halt threshold, but look, if anything, to me, this proves that Solana has grown incredibly more decentralized and resilient over the years. A lot of very intelligent people over at ANZA said 2 years ago this would have halted the chain, would have had an outage, and would have given all the Solana haters and the Solana naysayers even more ammunition for this on-off switch meme they love to keep peddling. Solana uptime has been pretty remarkable. We haven't had a single block of downtime in probably, I want to say 2 or 3 years now. I don't know the exact number, but
over 2 years. Over 2 years.
Over 2 years. Yep, Solana just runs ticking on like nothing's changed. And there is levels to this. On DevNet, I believe we did actually have a halt, but then within 40 minutes, everything was kind of automatically resolved and started working again as soon as the problem was fixed up. So, look, yes, it looks alarming. It looks very scary, and the fear mongers amongst us will say, look, Solana can still go off at any time. This proves that actually we're looking better than we ever have. There are problems. Problems come at every time in a network's life. In this case, we did come close, but look, everything was set in place that we're sufficiently decentralized. Enough validators were able to continue operating to make sure that transactions were finalizing correctly, and ultimately the main network was completely untouched.
Put your pitchforks down. Is that?
Put your pitchforks down.
Take, Finn? Put your pitchforks down. Nothing happened.
Yeah. 597 of 699 staked validators continued voting. Effective validators recovered within 40 minutes, and the network remained completely operational throughout the whole time. So, throw us some harder challenges, let's say.
I'm not sure we want that, Finn. You're inviting. What are you inviting here? Quantum threats?
Quantum threats is probably a bit outside of our league.
We've had a very.
I didn't know how
we've
to
had a
respond to
rough
that one.
start to the year already, Finn. I'm sure. I think 86% is about as close as I'm willing to get to a network halt. I don't want anything more than that.
Look, diamonds are built under pressure, and Solana has been through a tremendous amount of pressure, and our diamond is only shining brighter. So that's my view here. Give us what you got. We can handle it.
Yeah, I agree. I'm glad we didn't go down, and hopefully we can learn from it moving forward, right?
I guess the takeaway is to distribute your stake. Don't put all your stake into the biggest validators. This was one of the things that came up actually, was that Helios went down. Helios, the largest holder of stake, and I think people had a hard time reaching them during that time. Now, I wasn't here, so I can't vouch for that, empirically. But you know, maybe the answer here is actually to spread your stake out a bit more instead of consolidating amongst the top validators.
Yeah, interesting.
Good advice. Good takes. You know what else is a good take? Is this wordplay that's incoming from one of our favorite wordsmiths, who definitely sharpened his blades within the Solana ecosystem, but has been practicing this game for a long time. We are, of course, talking about Austin Federa, the DoubleZero co-founder. Headline here is DoubleZero embraces prediction market data, adds Kalshi Orderbooks to Edge Dataset. Not only is there an edge wordplay in there, there is also a new iteration of internet capital markets, which Federa is now calling new finance. As lovers of the term new media, we love things like new finance. Curious to find out what Finn's take is on that. But you'll be happy to hear that Austin Federa was also giving interviews from the floor of the New York Stock Exchange, talking about this new integration with Kalshi, which is, of course, the biggest prediction market out there, huge and growing vertical. So we love to see DoubleZero expanding their reach. Finn, I'm sure you'll give me the exact numbers, but I think the amount of stake that DoubleZero is now in charge of, should we say, has also been increasing rapidly, has it not?
It has DoubleZero obviously doing a tremendous job. They are crushing it in every capacity. I believe in their Q2 update, there is 462 validators connected to the DoubleZero network, 59% of mainnet stake weight, and $21.7 billion in connected value. So a lot of economic flow moving through DoubleZero. But I really like the story, Jack, because I think I like Austin Federa with his new finance quip, like Akshay with internet capital markets before him. There is a whole new breed of applications being built on chain that are reinventing finance as we know it now. It's not as straightforward as the DeFi pools of yesteryear, which people are very excited about. We're talking about prediction markets. We're talking about perps. We're talking about all of these new breakout apps that are changing how people navigate finance in general. Now, DoubleZero Edge is previously connected up fully into Solana, so all the Solana information is being filtered through streamed through DoubleZero Edge. They're now adding Kalshi market data, and Kalshi is an absolute behemoth. If you want to have any idea about predictions about culture or sports or anything, Kalshi is actually the first place I check if I want to see how likely something is to happen. If I want to get a gauge of how the world is viewing particular events, Kalshi is where I go for that. And now by plugging that into DoubleZero Edge, all of Solana's HFTs, all the market makers, all the professional traders, they now have access to this information as well, which I'm not a HFT. I'm not a market maker myself. Sorry, motorbike just drove past. Had to mute there. I'm not a market maker myself, so I don't know exactly how they're going to use this information to run better trading strategies. But these are very smart people. I'm sure they have very creative ways of analyzing this data and using it to hedge their positions or take other positions. So a brilliant step forward for more cohesive and more efficient on-chain finance. And I'm just loving this term from Austin Federa. I'm loving new finance. I feel like it's a very fun, very Gen Z way to approach the world. Thomas, have you played around with DoubleZero much at all?
I really haven't. But this seems like it's a lot better for all the predictors out there that are using Kalshi, right? I need to get in the prediction market streets, and it sounds like you can trade trading box office numbers. Like you could trade those, like what movie's going to have the best numbers. Is that right?
Yes.
You can trade anything.
In fact,
anything and everything.
In fact, the trading floor guest that you guys had on sounds like it was one of his more profitable trades of recent times, right?
Sam Long
guesstimated that Spider-Man's IP was worth a lot more than the Avengers IP. So he thought, hang on a second, there's some inefficiency, there's some mispricing going on here. And he took a position on Spider-Man's opening weekend box office revenue being much higher than the Avengers. And apparently he made a very good trade on that. So, I mean, the possibilities are endless. If you have enough data coming in and being processed and parsed as quickly as, high-frequency trading houses need, i.e. the innovation that DoubleZero's sort of brought to the world, very much specified infrastructure, then you can make this a reality. But this graph I find is quite interesting as well, right? Solana's professional traders need better market data. It's not for plebs. It's not for us. We'll go and buy things at the bottom and they keep going down. These people are in and out very, very quickly, much faster than we can even think. So I like to see this going forward. And just like the institutional adoption story, I think this is a precursor to new primitives on chain, new primitives on Solana, new business models being built, because all of a sudden the possibilities are increased. And it takes me back also to something Merit said a few days ago, if not a week ago now. He said, look, Solana's compute units have gone from, 48 million to 100 million, but in reality, it's a fourfold increase because of all the new possibilities that opens up. So I think this is overall, from an infrastructure perspective, very, very bullish, as Finn said. Love to see it.
I do want to elucidate very briefly how this might be beneficial for someone. So previously, there was no direct route, or there was a public, content distribution network that transmitted data from Kalshi's order books to on-chain trades, which is a pretty slow service, comparatively in the world of HFT. Now, by plugging this directly into DoubleZero Edge, all of these professional market makers get information from Kalshi, immediately faster at orders of magnitude that we can't really talk about with the naked eye, with the naked watch. And that means that, for example, if there is some massive change in the odds of the Hormuz Strait opening or closing, then people who are using DoubleZero Edge are going to get this information a lot faster through Kalshi than they might through a public channel or through a Trump tweet, and they'll be able to adjust their trading strategies based on that. Maybe that's taking some risk off the table. Maybe that's reopening the floodgates on risk. So I think there's a huge benefit that this brings to the people who, really put a huge amount of volume through Solana, and it makes Solana a better trading venue in general for all kinds of markets.
Certainly. It is exciting times ahead of us, and specifically for the next 10 minutes, because before we get to my favorite part of Finn's delicious newsletter, which is the end of the newsletter, we have to talk about story number 6, which is that Forward Industries acquires 254,000 SOL as Solana DAT giants battle for treasury dominance. Finn, you've opened with an interesting line here. Remember DATs? We spoke so much about DATs. They were the be-all and end-all of institutional energy, if you will. These guys had raised so much Wall Street capital, and they were coming on chain. They were buying SOL. They were staking it. It was great. And then we realized that had already been the top. And then they kept buying for a little bit, and then the prices crashed, and then we stopped talking about digital asset treasuries until, drumroll, 254,000 SOL acquisition, purchase, I should say. Soulmate also joined the action, Finn has written, but with a far more modest purchase, reportedly only 1,000 SOL. Now, one thing I want to draw your attention to, because we're not going to get too deep into this, is the amount that Forward Industries now owns as far as SOL goes. It says 1.38% there. If I'm not mistaken, Finn, you might have the numbers more accurately than I do, but the total amount of SOL owned by digital asset treasuries is 3%, I think. So if Forward Industries owns 1.38%, they own close to 50% of all DAT SOL. Is that correct? Am I remembering these numbers correctly?
I don't have the data in front of me.
We will find out.
3% seems high. That would suggest that there's some other major player who was at around a Forward Industries level, because I think the further you go down this list of DATs, the smaller their bag
Smaller,
get.
yeah.
3 is maybe outdated. I suspect it's probably closer to 2.
Could be.
Because we did have a few DATs, a few of the smaller ones at least, kind of unravel and into cash positions, as they say. They monetize their positions, others would say. My question here, and I think this is an interesting human psychology and ego debacle, is that if you are a very prolific DAT, if you're Forward Industries, can you ever actually sell? Because you've built your whole brand around aligning with Solana and being this titan of Solana's growth. Solana's going to reach a point where it's going to grow so massive that they're going to want to take some of that off the table, but they won't be able to, kind of in the same way that Sailor is not so well able to, because there's just such an ego battle there. You want to be the Solana guy. If you start selling, you stop being the Solana guy, and you need that trade to be right. So, at what point, Thomas, do you think that the DATs would start selling, or do you think they're going to hold forever? Maybe Jack, you can answer that if Thomas has dropped off.
Still here.
Okay.
Still here. I think they can do it and just never sell, right? Like, aren't they? They're pretty adept at using DeFi. I feel like wasn't Forward Industries like they were at least touting in the beginning that they were going to be using a lot of different DeFi protocols to boost their yield.
Mm-hmm.
So, I mean, theoretically, they could just never sell. I like the idea of that. Maybe that's not like something that would actually happen in real life, but that would be my hope for them.
Well, look, I think if they can hold the SOL, borrow against it, and pay the bills, put food on the table, then then that's good because the underlying should also appreciate. The largest holder dumping at any point is going to have some additional downwards pressure, I would imagine. So, yeah, as much as Saylor has bought billions, he's also sold, what is it, $430 million worth. The price seems to be bottoming between $60,000 and $63,000 per BTC. We mentioned earlier in the introduction that Alex Svanovic, interesting fella and the founder of Nansen, said recently that he doesn't think BTC will ever dip back below $60,000 a pop. Remains to be seen what happens. Markets do what markets do, and we can't really predict it. But quickly, Finn, going back to that question of how much Sol digital asset treasuries own, I've done a little Claude investigation, so I don't know if this is accurate or up to date, but here are the numbers that I'm getting. 16.5 to 17.5 million Sol, so that's roughly 2.8 to 3% of supply, but we don't know. This is an estimate. So yeah, maybe a good chunk of Sol is owned by digital asset treasuries, and as long as they keep accumulating, as long as they keep staking and not dumping on the open market, considering often when we look at the numbers, they bought the top and then they would be selling the bottom as well, then I think Sol's in a pretty good position. But TB, have you ever bought? Do you plan on buying stock of these digital asset treasuries?
No, I have bought some in the past. Which one did I have? I think I had like the hype one for a little while, but like
no, I traded that as well.
But I think there's no point in buying it. Like I don't know. We have access to Sol. There's good ETFs. I guess I don't really see the appeal for anyone buying those. However, people seem to be buying them though. What is the appeal to buying those?
The argument is that it's a bit more reflexive than Sol itself. And the other argument is that if you work for a highly powered TradFi firm that can't muddy its hands with Sol directly, going through something like a DAT is a way of getting exposure without, throwing in self-custody risk and without dealing with any of that. So it's very much a journeyman's exposure to Solana, with the added bonus of some reflexivity. But I think if you're an average person and you have, a Solana wallet, or you have a Robinhood account, or you trade on Coinbase, just hold native Sol, stake it, and you'll, be in a better position.
Yeah, I guess
not financial advice, obviously.
Yeah, you could like ARB if it's like at a discount, I guess. But I mean, you'd have to be following things pretty closely. I guess I could see like why some institutions would buy it, but like your average user, like most of the people listening here, you could probably just buy Sol and stake it, and you're fine, right?
Yes.
Buy Sol, stake it, not financial advice. With that said, we are going to move on to some of my favorite parts of the newsletter every week. Finn comes up with a list of honorable mentions. These are stories that really move the market that don't quite make it into the top 6 stories. But this week, I am happy to report that we've also got a dishonorable mention. These are often my favorites. But let's see what we have. Finn, take it away.
This week's honorable mentions. Solana's RWA ecosystem hits all-time high of $3.9 billion. MoneyGram Ramps goes live on Solana, enabling cash to crypto swaps in over 170 countries. Jupiter Lend rolls out V2, enabling collateral to earn native yield, lending APY, and DEX fees. Tether completes first independent audit. Solana weekly app revenue hits $22.9 million in strongest week since February. Collector reports $1 billion in gross revenue. And Bullish executed the first tokenized equity trades on a regulated digital asset exchange. There is a dishonorable mention there. I'll include it now. Hardware wallet provider Trezor leaks personal data of 13,689 customers in a data breach.
Boo.
Nasty business, but let's focus on the positives first. Jack, what do you like?
Torn again. I'm torn between MoneyGram and app revenue. I think we are all very familiar with why we need app revenue to be high. The fact that it's had its strongest week since February is obviously great. But let's talk about MoneyGram for a second, because MoneyGram going live with Solana-enabled cash to crypto swaps in over 170 countries is huge. Think back to 2017, 2018, 2019. We were talking about things like enterprise blockchain. Yes, we were talking about supply chain applications that, very boomer and very boring, but we're also working really hard to solve this remittances problem. A lot of people entered this space as technology-first founders, as builders, trying to help individuals move money across continents, across countries, without paying massive, exorbitant intermediary fees. And I think the fact that this is happening through Solana now is massive. So I'm going to vote with MoneyGram ramps going live on Solana, enabling cash to crypto swaps in over 170 countries. We like the fact that if a man or a woman goes to another part of the world to support their family and they want to send money back, that they're not getting fleeced by intermediaries. And that is my favorite. TB.
Oh, that's good. Yeah, MoneyGram's huge. I'm gonna go with Tether. I feel like the Tether audit has been something like draining some people for just years, and there's Tether truthers out there. Like what is the guy like a Terra, like fat guy Terra, something like that. Like there has been people that have just dedicated their lives to fudding Tether, and they just got absolutely ruined, right? Like that is I feel like that's been like one of the like most negative narratives over the years is that Tether doesn't have it's not fully backed. It's never been audited. So for that to finally like come to fruition, I like it. You know, I feel like that's like a hurdle that we've needed to get over for a while. What do you think, Ben?
You know what it opens the door to as well that I'm very excited about?
Yeah.
Tether IPO.
Oh,
Yes.
we've been talking about this for a long time.
Make it
When
happen.
Tether IPO? When can we be part owner in a company that's purchased huge amounts of treasuries, huge amounts of gold? We want a piece of that. So when is this going to happen? Who do we email?
Do they
I
need
don't
the
know, but
IPO though? Don't they make like an insane amount of money per person? They have like a very few
Yeah,
people
one of
on
the
their
most
staff, and they make
profitable
millions per.
companies. Yeah, in history, one of the most profitable companies per person working for the company. I think. I'd love to own a piece of it.
Me too.
I think a lot of people would. So when, who do we email? Please let us know in the comments who we should email to make that a reality. I suspect Paolo's DMs aren't open. But any favorites here?
I'm going to go with Jupiter Lend V2, enabling collateral to earn
Okay.
native yield, lending APY, and DEX fees. Jupiter Lend is great. It's just got even better. I think there's so much capital sitting in there that, you know, is being used in one way but can be used in another way. And I think diversifying and expanding the capabilities of that capital is a very clever way to make the most of all the funds that are sitting there. So yeah, for me, it's going to be Jupiter Lend V2.
Awesome. I also want to give a quick shout out to Collector Crypt because they reported $1 billion in gross revenue. That is huge. Cannot be understated. I mean, $1 billion in revenue on chain is already massive. The fact that Collector Crypt, as much as they've been around for a while, this sort of parabolic run in attention and trading volume has been quite a recent phenomenon, if you will. And they have an integration also with Solana Mobile. So massive congrats to those guys. We did talk to Tworm Holberg, the founder. Really funny guy, actually. So if you want to check that conversation out, you can go to SolanaFloor.com/the videos page. So dishonorable mention here. Finn, I'm going to let you share your take, but I should warn people or caveat this rather with saying that the data breach of 13,000 people was new customers. So if you haven't recently bought a Trezor, then don't panic. We probably should have said this at the beginning. Maybe people are, frantically looking through that list to find out if their data was shared. Fret not, it probably didn't affect you. But go ahead, Finn. Why did this make the list of dishonorable mentions?
Yeah, I believe it's the last 90 days. So if you've purchased a trade in the last 90 days, your data may have been leaked.
Not great.
It's a dishonorable mention because self-custody is so difficult. It's becoming more and more difficult. And this is just adding an extra layer of concern to this. So, this data leak means that people might have access to all kinds of records, your shipping address, where you live, your name, your phone number, your email address. It's just bad optics. It opens the door to a whole bunch of OPSEC risks, and it's becoming incredibly common actually, these hacks like this. So if you compound the inherent risk of self custody, now you add this very tangible, physical, real world risk of having your data leaked out. It makes it very hard to want to take part in crypto in this way. We said on a different show, I believe maybe last week, that most people are better off storing their crypto in an exchange. And I think that's probably true. I think self-custody is not for everyone. If, hardware wallets can't keep, personal data safe for their customers, that's also just adding an extra layer of risk. It's a sad story, to be honest.
I
Just
agree.
very
It's
quickly-
very, very troubling times for anyone
It is.
trying to self-custody out there. I don't like hearing this at all.
And I want to be concrete about what people can do because, yeah, you move your assets from one cold storage to another, thinking it's safe, but the fact that you made a purchase of a cold storage, wallet means you're more exposed. So, what can people do? Well, luckily, Mert has written a rather long post saying, "Look, this is probably going to continue to happen to all software, not just hardware wallets, but you need to protect yourself." So we're not going to go through this in detail, but do go and check this post out. Some of it, as he says, is overkill depending on who you are. You don't need to do all of this, but if you are keeping money on chain, if you're keeping money in a hardware wallet, in a hot wallet, in a cold wallet, then go read this. I think it's good advice. And with that, let's switch our attention back over to the newsletter because Finn Thomas, as much as you did it this week on Wednesday, next week, Wednesday, you're also doing an episode of Trading Floor. Now, this week, the assets that were pitched were Hype, Pump, and Met. I know that Hype and Pump are two trades that you took, and Met you did not. But what was the key takeaway from this week? And do we have any alpha that we can share actually with the audience about who's joining next week, or is it all hush hush? We're keeping it all under wraps so far.
I think we're keeping it under wraps so far. And I think kind of the theme of this last episode, I mean, we had three very different guests. So we got to hear very different opinions and from different sides of the industry. But I think all of them were really looking at like revenue generating protocols. And, they kind of pitched some of the best ones, right? We took the Hype and the Pump one, and there are very good reasons for why we took them, right? So I don't know. I enjoyed it. I enjoyed learning about it, and all the guests were great. I don't know how you want to. I don't know if you have anything to add to that, Finn, but I enjoyed it.
I think the only thing I want to add is that buybacks look really good when price goes up.
Yeah.
The buyback debate has plagued crypto Twitter for months and months, even years now. And if price goes up, people say buyback's great and it works. If price doesn't go up, people say buybacks are ruined. Look, I think buybacks work. I think the fact that the two most successful crypto apps of the past 2 years, being Hype and Pump, but have both got a massive buyback program, and they're both extremely well performing coins at this juncture of the market. I think that tells a story. I think people need to be aware of that. And to Quix's credit, Met is also doing this, probably not at the same cadence, but they do have some buyback program installed. And ultimately, until we get something like the Clarity Act that gives us some framework, this is the table stakes method of delivering value to holders, and we're probably going to see more and more people adopt this as markets turn more and more bullish.
Certainly. Now, stat of the week before we get to the state of Solana in a tweet. Finn, what do we have here? FOMO going mainstream. What's going on?
So this week comes from Carlos. I believe X Blockworks now over at Rockway X. I'm not sure. Don't quote me on that. FOMO going mainstream. Look at this parabolic trajectory of FOMO's daily active traders. It's rocketed from somewhere around several thousand to over 50K in a matter of weeks. Seong actually commented underneath this, and he said there's an extra 20K users beyond this on EVM networks. So this is only tracking Hyperliquid and Solana. Obviously, FOMO's net goes a lot wider than that now. So FOMO absolutely crushing it, completely breaking out. Well done on the user acquisition journey to everyone at FOMO.
Absolutely. Congrats on that. And the state of Solana in a tweet. This is something that TB shared his thoughts on earlier as well. And I fundamentally agree with this. But yeah, talk us through it.
Yeah, so this goes back to what TB was saying earlier. Jeets, i.e. Jeets, saying these two going band for band will ultimately benefit the user, by the way. Few really understand this. So in both tweets, we have Alon saying pump.fun app hitting a new all-time high in daily active users. FOMO also 10x weekly traders in the last couple of months. So again, this is the steel sharpens steel argument that we've brought up many, many times. Competition breeds innovation. And ultimately, the trader, the end user, is going to benefit from this. Maybe that's from fee compression. Maybe that's from the race to have better features. But ultimately, competition is good. It means that you have to innovate, you have to continue to grow, or else you're going to be left behind. So, broad strokes, I agree with this view from IE Jeets.
Yeah, we definitely don't want a single name leading in any of the many verticals that we follow and participate in on DeFi. So yeah, gonna ask an annoying and possibly washed out question. Are they gonna do an airdrop anytime soon? Now that FOMO's sort of in the picture, if you will, now that there's clear competition, Pump is allegedly copying some of their social strategies, allegedly paying people to come over, which, as Ariel Givner said, is not illegal at all. Now that you have pressure from Ansem and his sort of flywheel of airdrops, are they going to do an airdrop?
I still don't think they need to. Yeah, I don't see it.
Okay, I will stop asking that question in that case. And to all of our listeners, please stop asking me as well. Finn and Thomas don't think it's going to happen. Now, ladies and gents, that is your week in Solana. That is your week in Solana. Trading Floor is back next Wednesday. We can't announce yet who the guests are going to be, but I promise you it's going to be a banger week with 2, maybe 3 guests all pitching their trades. And then Thomas and Finn are going to break down those trades. They're going to argue against the pitch, and they're going to take the trade or they're going to leave the trade live on air. You can track all of that progress on perp.so/trading floor. Unfortunately, we can't share the alpha with you now, but if you follow us on X, you will see when we announce who the guests are. That's going to be very soon. And of course, everything we covered today is available on SolanaFloor.com. If you haven't already done this, do it now. Go and sign up to Finn's spicy newsletter. It's funny, it's spicy, there's some hot takes in there, but it's also going to teach you, you're going to learn a lot, I promise. And finally, we are publishing an institutional Solana price target deep dive. That's happening later today. So you can go and watch that on SolanaFloor.com or on YouTube or on X as well. And if we're going to find out if, as some people have predicted, Sol is headed to all-time highs in 2027, and as others have predicted, potentially 4 digits in the coming years. I'll give you a piece of alpha. Some banks are saying potentially $2,000 per Sol by 2030. We don't know yet, but you can go and watch the video and find out to what extent that is realistic. For transparency, SolanaFloor is a subsidiary of the Jito network, so nothing we say here is, of course, financial advice. I want to thank you all for watching. Ladies and gents, I will see you all next week. Thomas, Finn, thank you for highlighting the key elements that need to be highlighted, and thank you for ridiculing some of the questions that I have for you as well. Appreciate it as always, and I'll see you next week.
Thanks, guys.
Thanks, fellas. Always a pleasure.